your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media, this is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only talk about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, we're going to celebrate today, but this is a weird one because, you know, I've beaten anorexia. I've been on this planet for decades and decades, and I thought I knew most foods, but National Plum Pudding Day. I don't think I've ever heard of plum pudding before today. And when I look at the details of it, I didn't even see any plums in it. Because it's a holiday deal. It's kind of, I don't know, maybe it's a fruitcake or something. I don't know. Put a National Plum Pudding Appreciation Day. If you're familiar with it, tell me, put it in the chat. Let me know if you've had it, if you like it. You know, as when I was growing up, yes, I know it was a long time ago. We actually celebrated, well, first off, we celebrated holidays on the holiday. So February 12th, as we record this, you know, that would just be called Lincoln's birthday. But, you know, we had to add a holiday in for Martin Luther King Jr., put that in January. So now I guess they put in, they consolidated all the presidents into one on President's Day. And I still remember getting, first off, we had the holiday on the holiday. Then it went to the holiday on Monday. So we had 2 Mondays in a row off in February. Like that one. So I guess some of the kids still have 2 Mondays in a row off. Now, I don't know this one because before the program, Josh and I were chatting, and they had Teacher Development Day at their school on this past Monday. Yeah, I think that means Rehydration Day following the Super Bowl. Is that what they call that one? I don't know. I'm just speculating here. So let's take a look and see what the markets are doing today. Been a good day in the markets as of the last time I looked. Let's see what they're at right now. So we're looking at the Dow Jones Industrial. Whoa! The Dow Jones Industrial Average is off 577 points. Ow! Yeah, that one's painful. The NASDAQ is down 378. The S&P 500 is down 80. Oil down $1.83 a barrel, and gold is down $138 an ounce. So all red right there. So what is that telling us? Well, the 10-year Treasury, the yield is down on that one, which happens to be good if we're thinking about mortgages. Yeah, and we're looking at the mortgage bond. That's up 20 basis points, which means that we're seeing the mortgage interest rates are dropping a bit, which is good news for the conversation we're going to have today. We did see some numbers that came in. Existing home sales, very, very weak. And we looked at existing homes, jobless claims came in weak again. So we're looking at all of these numbers, not good. We'll talk more about that. But I did mention oil down $1.74 a barrel. So is that helping us or hurting us with gas prices? Well, it probably won't help a lot in California. But the rest of the country, well, their gas price is $2.94 a gallon on average around the rest of the country. $4.54, $4.55 here in California. Now, even at Costco yesterday, I think I paid $4.39 or something along those lines. So gas prices, most of the country good. California, well,
I got
yes.
a bad feeling about this.
Yeah, bad feeling about the prices in California. But we get what we vote for. Let's see what else is going on in the world. Anything else going on in the news and the markets? Let's take a look. We're looking at multifamily, strength in multifamily homes. Other segments are weak. The jobless claims dip but run higher than expected. So, yeah, they did come in a little bit lower. Last week, it was revised to 232,000 from 231. That was a revised number. This week, that jobless claims, initial jobless claims, 227,000. So jobless claims still, not good. And we'll talk about that more in the Mortgage Minute about what's going on there. But, there is some challenges in what's going on in the jobless claims. But something, let's talk about this right now, because I'm going to share with you, and Josh, I think we did this as Mortgage 101. So let's think about this. Starting February 24th, California is opening up a program that could put $150,000 towards your home purchase with 0 monthly payments. Wow, California is putting up the money. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. The Dream for All program has 2 income tiers. Which tier you fall into could mean a $7,000 difference or more staying in your pocket when you sell. Orange County families making up to $216,000 can qualify. Los Angeles, $168,000. San Diego, $207,000. But here's the catch. This is a lottery system, and you need your pre-approval letter before you can even register. The portal opens February 24th and closes March 16th. Only 2,000 families will be selected. Again, you have to have the pre-approval letter before you can even go into the portal. Coming up, I will be breaking down the income limits, eligibility requirements, application timeline, and the strategic implications of this shared appreciation structure. So you're going to want to stay tuned to Ron Siegel Radio. We have all the details for you. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, 4 ways your home equity can work for you. California Dream for All 2026 and strategic mortgage management. We'll talk about all that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to determine if what your principal and interest payment will be. And if you don't have a mortgage calculator, get it. It's free. rsrlinks.com/mobile apps. I'm sorry, rsrlinks.com/calculators. rsrlinks.com/calculators. And yes, it's got the mortgage calculator, a student loan payoff calculator, compare mortgages on that calculator. It's all right there. So what did rates do yesterday? Well, mixed bag. Conventional 30-year fix, 6.048. That was up. Jumbo 30-year fix, 6.361. That was up. FHA 30-year fix, 5.956. That was up. VA 30-year fix, 5.69 down. And the USDA 30-year fix, 5.79. That was down. Want our thoughts about the market each and every business day morning as early as the data allows? rsrlinks.com/HBOD. rsrlinks.com/HBOD. That's the Ron Siegel Radio community. And we put a lot of goodies in there for you. So what's the market doing today? What's driving the market today? So we're looking, the S&P 500 down 79 points right now. Oof. We got the mortgage bond at 4.123. That's down 5 basis points. And we're looking at the mortgage. I'm sorry, that's the 10-year treasury is down 5 basis points at 4.123. And we've got the 30-year mortgage bond, 5.0 coupon. That's up 19 basis points. Remember, when that goes up, interest rates go down. That bond up, rates down. That's good news. That's on the super secret website, google.com. You can find that right there. Not that difficult to find. So what's driving all of this? So we're looking at stocks are down this morning. Mortgage bonds are higher, erasing yesterday's losses and trading above where they opened ahead of the stronger BLS jobs report. Clearly, the market is calling BS on the BLS as their figures do not make any sense. Yesterday's 10-year auction was weak, with Bill Hagman grading the auction at a D+, likely due to the stronger than expected jobs report, at least on the surface. But the bond market is rallying this morning. So today's 30-year bond auction may be a bit stronger. As we went over yesterday, the BLS said that 130,000 jobs were created in January after job growth was essentially flat in 2025 for the full year. They revised their figures down by 69% to the weakest year of job growth since the Great Recession. Ow! Yikes. The raw jobs data showed that there were 2.65 million jobs lost in the headline business survey and 630,000 jobs lost in the household survey, where we get the unemployment rate from. There are always seasonal adjustments higher in January, as a report tries to account for seasonal hires being let go, but this was extremely generous. We have explained many times that all the job growth has been coming from education and healthcare, which are jobs that are always needed and not impacted by what's happening economically. For 2025, if you remove those jobs, all the other sectors combined had 517,000 job losses. And let's remember, there are still more QCEW revisions to come for 2025. Bottom line, pretty much every analyst and the bond market does not believe yesterday's jobs report, which is why the bonds are now higher and yields are lower than they were at the open yesterday. Existing home sales released this morning showing closings on existing homes in January. The market was expecting 4% decline, but sales fell 8.4%. Whoa. The annualized pace is now 3.91 million. This was a miss. However, realtors did say that the bad weather in January did impact things. And while that may be true in the Northeast, especially, a lot of decline came from the West. Something else to consider, the annualized figure takes the sales in the month and annualizes them, so it can be very volatile. December saw very strong sales, so the annualized pace was the highest in 3 years. But maybe some of the sales were pulled forward, resulting in a weak January. Along with the weather, we feel these figures will improve, especially as we get into the spring home buying season. Existing inventory continues to fall, dropping 0.8% to 1.22 million units, which is tight. Inventory was up only 3.4% year over year, and based on the pace of sales, the month's supply of inventory is only 3.7 months below a balanced market of 4.6. The median home price fell 2% month over month to $396,800. Median prices are now up 0.9% year over year. But remember, that is not appreciation, and is measuring the middle price homes that sold in January. The National Association of Realtors did release their Realtor Confidence Index within this report, showing that homes remained on the market for 46 days compared to 41 days last year. 16% of homes sold above list, which was unchanged year over year. First-time home buyers accounted for 31% of sales, increasing from 29% the previous report and 28% last year. They continue to stay in their range between 27 and 32%, but affordability being at the best level in about 4 years may be helping. Cash buyers made up 27% of transactions, up from 29% last year, while investors accounted for 16% compared to 17% last year. Initial jobless claims, which measures individuals filing unemployment benefits for the first time, fell 5,000 to 227,000, which was slightly higher than estimates. As stated many times previously, this figure does not capture the people going into the gig economy, hence understating what's really happening. Continuing claims, or those who continue to receive benefits after their initial claim, rose 21,000 to 1.86 million. This too was a little higher than market estimates. The figure is still below 1.9 million, but there are a lot of benefits expiring, as people can only stay on them for 26 weeks. In many states, 21 weeks in several, and 16 weeks or less in 7 states. The New York Fed released their consumer credit report, showing that credit levels are rising dramatically, but so are 90-plus day delinquencies. Auto loans and credit cards that are 90-plus days delinquent are at the highest level since the great financial crisis, showing that consumers are adding on more debt, but having a hard time paying it. Once one gets to 90-plus days, it's hard to catch up, as they have 4 payments to pay back. Rate cuts would certainly help mitigate some of the interest burden, but the question remains, how long can consumers continue to spend on credit before they hit a wall. Retail sales in January were weak, but one report does not make a trend. We will be paying close attention to consumer spending behavior as it could be a sign of a downturn. That is the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And just make sure that you go and get all the calculators. They're free to you. rsrlinks.com/calculators, rsrlinks.com/calculators. Gotta love the idea of all those calculators because almost anything you can think, we've got a calculator for it. There's about 60 of them. Maybe I think we're up to 64 calculators. So you want a blended household interest rate calculator, it's there. Buy versus rent calculator, mortgage comparisons. Do you want to look at an adjustable rate mortgage? That might be a good idea to look at an adjustable rate mortgage just because we think interest rates are going to continue down. So why wouldn't you want to get the best mortgage possible? It makes a lot of sense, especially when you can lock it in for the first 5 years. So just throw that out there for you. There's a lot of good stuff in the calculators. And I'm going to share this with you once again, Mortgage 101, because we're going to do this when we get back, when we get back from the break, because it's an important thing, because it's $150,000 to help you buy a house. Starting February 24th, California is opening up a program that could put up to $150,000 toward your home purchase with 0 monthly payments. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. The Dream for All program has 2 income tiers, and which tier you fall into could mean a $7,000 difference or more staying in your pocket when you sell. Orange County families making up to $216,000 qualified. Los Angeles, $168,000. San Diego, $207,000. Call me for any other county in the state, but here's the catch. This is a lottery system, and you need your pre-approval letter before you can even register in the portal. The portal opens February 24th and closes March 16th. Only 2,000 families will be selected. Coming up, I'm going to break down the income limits, eligibility requirements, application timeline, and the strategic implications of this shared appreciation structure. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, yes, the California Dream for All program. We'll talk about it. 4 ways your home equity can work for you and strategic mortgage management. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Here it is. Mortgage 101 brought to you by rsrlinks.com/FTHB. rsrlinks.com/FTHB. That is first time home buyer. California Dream for All program is opening up again on February 24th. And if you're thinking about buying your first home in California, this could be the most important information you hear all year. The California Housing Finance Agency has allocated between $150 and $200 million in funding to help approximately 2,000 families become homeowners in 2026. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. This program is fundamentally different from traditional down payment assistance. California Dream for All offers up to 20% of your home's purchase price in down payment assistance capped at $150,000, whichever is less. This assistance comes in the form of a shared appreciation loan, which is a 0% interest loan with no monthly payments. You only repay it when you sell the home, refinance your first mortgage, or pay it off completely. Now, here's where strategy becomes critical. The program has 2 distinct income categories, and which category you fall into determines their 3 major factors: your minimum credit score requirement, your first mortgage interest rate, and the percentage of appreciation you'll share when you eventually sell. Let's talk about income thresholds for the major Southern California counties. In Los Angeles County, the maximum income qualify is $168,000. In Orange County, you can make up to $216,000 and still qualify, and San Diego's limit is $207,000. Riverside and San Bernardino counties have identical limits. If your household income is at or below $109,333, you're in what's called the low income category. Between $109,333 and the maximum of $164,000, you're in the moderate income category. If you're buying in any other California county, reach out to us and we can provide you with the specific income limits for your area. Now, why do these categories matter beyond just qualifying? If you're in the low income category, meaning at or below 80% of area median income, you receive 3 substantial advantages. First, your minimum credit score requirement is 660 instead of 680. For families working to rebuild their credit, those 20 points can be the difference between qualifying and not qualifying. Second, you qualify for what Cal HFA calls their low income interest rate on your first mortgage. This is a reduced rate compared to the standard rate that moderate income borrowers receive. Over the life of the 30-year mortgage, even a quarter point difference translates to thousands of dollars in interest savings. Third, and this is perhaps the most significant long-term benefit, you only share 15% of your home's appreciation instead of 20%. This is calculated on a 0.75 to 1 ratio instead of 1 to 1 ratio that moderate income borrowers face. Let me explain what that means in practical terms. Say you purchase a $500,000 home and you receive the full 20% assistance, which is $100,000. 5 years later, your home is worth $640,000. That's $140,000 in appreciation. If you're in the moderate income category, you share 20% of that appreciation, which is $28,000. You'd pay back the original $100,000 plus $28,000 for a total of $128,000. If you're in the low income category, you only share 15% of that appreciation, which is $21,000. You owe back $100,000, the original assistance, plus $21,000 for a total of $121,000. That's a $7,000 difference that stays in your pocket. And if your home appreciates more significantly, that difference becomes even larger. Now let's talk about the eligibility requirements. First, you must be a first-generation home buyer. Cal HAFA defines this very specifically. You cannot have owned a home in the last 7 years, and your parents cannot currently own a home. If your parents are deceased, they cannot have owned a home at the time of their death. There's one important exception. If you were ever placed in foster care or out-of-home institutional care at any time in your life, you're automatically exempt from the parent ownership requirement. You still cannot have owned a home in the last 7 years, but your parents' ownership status does not matter. At least one borrower on the loan must meet this first-generation requirement. But here's the critical part. All borrowers on the loan must be first-time home buyers. Cal HAFA defines a first-time home buyer as someone who has not owned and occupied a home in the last 3 years or someone who has never owned a home before. So Cal HAFA says 3 years, and the Dream for All says 7 years. You must also have at least one borrower who is current California resident, and the property must be your primary residence. Now let's talk about the application process. This is not first come, first serve. Starting February 24th, 2026, and running through March 16th, 2026, there is an application portal that opens for registration. During those 3 weeks, you register for the opportunity to receive a voucher. After March 16th, when the portal closes, Cal HAFA conducts a random lottery selection. It doesn't matter if you registered on February 24th or March 15th. Everyone who registers during the window has an equal chance of being selected. After the lottery, Cal HAFA will email applicants one of 3 statuses. You received a voucher, you've been placed on a wait list, or you were not selected. If you receive a voucher, you have 90 days to find a home and reserve your funds. You can request one 90-day extension if needed. Here's the critical part. You must have a pre-approval letter from Cal HAFA, from a Cal HAFA approved lender before you can even register in that portal. Yes, our team is a Cal HAFA approved lender. So you got to have the pre-approval letter from us before you can even register in the portal. This isn't something you figure out after you're selected. You need to be fully pre-approved with your credit pulled, your income documented, and your lender confirmation in hand before you go into the portal before February 24th. This means the work starts right now. You need to get your credit report and review it for errors. You need to gather your income documentation. If you're self-employed, that means 2 years of tax returns. If you're W-2 employed, that means recent pay stubs and W-2s. You need to understand your debt-to-income ratio and make sure you meet the minimum credit score requirements. The program also requires completion of Cal HAFA's Home Buyer Education. This is a 1-hour online course that's free and covers what shared appreciation means and how it affects your mortgage. Let's talk about the loan structure. The minimum combined loan-to-value ratio is 95%. The maximum is 105%. What this means is that you can only contribute a maximum of 5% of your own funds toward the down payment. The program is designed to help people who don't have significant cash reserves. The shared appreciation loan must be second lien position behind your first mortgage. You cannot use this assistance to pay off existing debt. The funds must go toward down payment and closing costs. Here's something important. You can refinance your first mortgage one time and resubordinate the Dream for All loan without having to pay it back. This means if interest rates drop significantly in a few years, you're not locked out of refinancing. However, you can only do this once. After that first refinance, any subsequent refinance would trigger repayment of the shared appreciation loan. When you eventually sell or refinance, you must repay the original assistance amount plus your share of the appreciation, or their share of the appreciation. If your home is not appreciated or if it's declined in value, you only pay back the original assistance amount. You don't owe additional money if there's no appreciation. That's the risk Cal Haffa is taking by partnering with you in this program. There is a cap on shared appreciation at 2.5 times the original loan amount. So if you received $100,000 in assistance, the maximum appreciation share you could ever owe is $250,000, regardless of how much your home actually appreciates. Now let's address the strategic question. Is this the right move for your household? We need to evaluate everything through the lens of safety, liquidity, and return. From a safety perspective, you're taking on no additional monthly payment burden with this assistance. The shared appreciation loan has no monthly payment, so it doesn't affect your household cash flow from month to month. From a liquidity perspective, this program allows you to become a homeowner without depleting your savings. You start building equity now instead of waiting years to save a down payment. From a return perspective, you're giving up 15 to 20% of your appreciation depending on your income level, but you're also avoiding private mortgage insurance by putting at least 20% down between the first mortgage and the assistance. You're also potentially benefiting from home appreciation over the years you would have otherwise been saving. This is why strategy beats rate always. It's not just about getting the lowest interest rate on your mortgage. It's about understanding the complete financial picture, the timing implications, and how this assistance program fits into your long-term wealth building strategy. Let me address a few common questions. First, what types of properties are eligible? The program works for single-family residences, townhomes, approved condominiums, and manufactured homes on permanent foundations. It must be one unit property that you'll occupy as your primary residence. Second, there is a sales price limit. Is there a sales price limit? No. As of 2020, Cal Haffa eliminated sales price caps on eligible properties. You must meet the income limits, but there's no specific price cap on the property itself. Third, can you combine this with other assistance programs? Generally, no. The Dreams for All assistance cannot be combined with Cal Haffa's My Home Assistance Program or most other down payment assistance programs. Cal Haffa has set aside between $100 and $200 million for this round of the program to help approximately 2,000 families or households. Following direction from Governor Newsom, at least 10% of the funding is reserved for applicants living in qualified census tracts. The reality is the demand will likely exceed supply. In previous rounds, the program has been significantly oversubscribed. This is why preparation is so critical. You can't control whether you get selected in the lottery, but you can control whether you're ready to move forward if you are selected. Here's what you need to do right now. First, go to rsrlinks.com/keysteps. rsrlinks.com/keysteps. That's our financial house in order tool. It'll walk you through exactly what you need to review, what documents you need to gather, and what your credit picture needs to look like. Second, rsrlinks.com/FTHB for California specific first-time homebuyer resources and guidance. You'll need to pull your credit report and review it for errors. You need to determine which income category you fall into and what that means for your credit score requirement and your shared appreciation percentage. You can do that at rsrlinks.com/FICO. rsrlinks.com/FICO. You need to find a Cal Haffa approved lender. You already have, that's us. And get your pre-approval letter completed before February 24th. This isn't something you can figure out in the last week before the portal opens. The families who successfully navigate this program are the ones who start preparing in advance. They know exactly where they stand financially. They've addressed any credit issues. They have their documentation organized. They understand the program requirements, and they're ready to move quickly if selected. Remember, this is about strategic debt management and positioning your entire financial picture for long-term wealth building. The Dream for All Assistance is a tool, but like any tool, its value depends on how you use it and whether it fits your overall structure. Remember, the portal opens February 24th, closes March 16th. That's your window. Make sure you're ready. For comprehensive preparation and to get your financial house in order, visit rsrlinks.com/keysteps. Again, for the first-time homebuyer resources, go to rsrlinks.com/FTHB. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to Mortgage 101, brought to you by rsrlinks.com/FTHB, rsrlinks.com/FTHB. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, 4 ways your home equity can work for you and strategic mortgage management, all that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. 4 ways your home equity can work for you. You may have heard homeowners today have a lot of equity buildup, but what does that really mean? Let's break it down. Because your equity isn't just a number, it's a powerful asset that can help you take your next big step in life. Here's how it works. As you pay down your loan and home prices rise through the years, the share of your home that you own free and clear grows. That's your equity. And according to data from the Census and Adam, 2/3 of homeowners have a substantial amount of it today. 39% own their home outright without owing anything on it. And another 27% have at least 50% equity in their homes. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490, FM 98.1 video feed, you are seeing a chart of homeowners sitting on tremendous equity. That's a big deal. And just in case you're wondering how that translates into real dollars, Cotality says the typical homeowner has almost $300,000 in equity today. That's 6 figures. And whether you have that much, even more, or a bit less, here are a few examples of how you can use it. Number 1, move into a home that better fits your life. Your needs change over time. Maybe your home is starting to feel cramped, or maybe you have more space than you need now that your adult children have moved out. Either way, you can use your equity as a down payment on a home that's a better fit for what you need now and going forward. You may even have enough equity to buy your next house in cash. Number 2, upgrade your current home. If you're not ready to move just yet, you could reinvest your current home instead. Renovations like a kitchen refresh or updated bathrooms could add value when it's time to sell down the line. Just be sure to talk to a real estate agent before you tackle your project so you can prioritize updates that'll give you the biggest return later on. Number 3, fund a major life goal. Equity can also help fund your life goals, whether it's starting a business, saving for retirement, covering education costs, or helping out someone you love. Some homeowners are even passing down some of that wealth to help fund a loved one's down payment on a home. Number 4, avoid foreclosure in tough times. If you're struggling with payments, your equity can also be a lifeline. Many homeowners who hit financial hardship can sell their homes and walk away with money in their pockets instead of facing foreclosure. If that's something on your mind, talk to a real estate expert about your options and how equity can help. And you might even just use some of that equity to pay off other debts to make things even easier. If you're interested in using your equity for one of the reasons we discussed, here's what to do. Number 1, ask for a personalized equity assessment on your property. Do we do that for you for free? Meet with a financial advisor if you're interested in using that equity, and we can coach you on how to talk to them, because you got to be strategic. Because when it comes to tapping into this resource, there are a few things you'll want to keep in mind, like making sure you'll have a good loan to value ratio, even if you use some of your equity. That means, as a general rule of thumb, you want to maintain at least 20% equity in your home as a financial cushion, something many homeowners didn't know back in the crash of 2008. The good news is, according to the Intercontinental Exchange, most of today's equity meets that guideline. Quote, as of Q4, mortgage holders have $17.3 trillion in home equity, including $11.2 trillion in tappable equity, accessible via cash out refinances or home equity lines, while maintaining 20% equity in the property, unquote. Your home equity is one of the biggest financial assets you have. Whether you're thinking about moving, remodeling, or working toward a big goal, it's worth exploring your options. Reach out to a financial advisor today. We can put you in touch with one. Tell me, what's one goal you'd have to do right now if you had the funds? That's the Real-Time Real Estate segment, brought to you by rsrmoney.com, rsrmoney.com. I think we have enough time for Borrow Smart. What is this? Borrow Smart, brought to you by GetHomeSelect.com, GetHomeSelect.com. Picture this. You have a house with $500,000 and $500,000 sitting in your bank account. Is your house paid off? The answer might surprise you, and it could save you millions over your lifetime. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. I've been helping families make smarter financial decisions since 1983, and today we're going to challenge one of the biggest financial myths in America, that paying off your mortgage as fast as possible is the smart move. Let me walk you through something. Imagine your house is worth $500,000 with a $500,000 mortgage. Now, you also have $500,000 in your bank account. Here's the question. Is your house paid off? The answer, yes, because you could move that money from your bank account to pay off the mortgage at any time. You have $1 million in assets working for you right now, but here's what most people miss. The moment you move that $500,000 from your liquid account into your house, you still have a $500,000 house, but now you only have $500,000 in total assets instead of $1 million. The rate of return on equity in your home is always zero. Your house will go up or down in value regardless of how much you owe on it. So any equity sitting in that house is losing money to inflation and opportunity cost every single day. Here's where it gets interesting. Banks love to push 15-year mortgages. They tell you you'll save on interest, pay it off faster, be debt-free sooner. Sounds great, right? But let's look at the real example. Take a $500,000 loan at 6%. On a 15-year mortgage, your payment is about $42.19 per month. On a 30-year mortgage, at the same rate, it's $29.98 per month. The difference, $1,221 per month. Now, what if you took that 30-year mortgage and put that $1,221 difference into a side account earning 6%? At the end of 30 years, both scenarios would leave you in exactly the same financial position. But here's the critical part, and this is what really matters. What happens if you lose your job in year 10? If you've been making that $4,200 a month payment on a 15-year mortgage, you've never missed a payment, you've done everything right, the bank will still foreclose on your house if you can't make the payment. They don't care about your perfect payment history. But if you've been making the $29.98 payment and banking the difference after 10 years, you'd have nearly $198,000 in your side account. That's enough to make your house payment for years while you get back on your feet. You keep your house, you keep control. So let me give you another scenario. You and your neighbor both have houses worth $1 million. You've been paying yours off aggressively. You only owe $100,000. Your neighbor has been doing the opposite. They've kept a large mortgage and built up liquid savings. You both get in an accident and can't work. Whose house gets foreclosed first? Yours, because the bank only needs to sell it for $100,000 to get their money back. Your neighbor's bank will work with them because they're in too deep to foreclose easily. Or imagine an earthquake swallows both houses. Your equity is at the bottom of that hole. Your neighbor's cash is safe in the bank. Who's better off? This is what we mean by safety, liquidity, and return. Once you put money into a house, it's no longer safe, no longer liquid, and has no rate of return. Look, whether you pay off your mortgage or not is ultimately your choice. But the math is clear. Paying cash for your house or rushing to pay it off early can be $1 million mistake over your lifetime. This is why strategy beats rate always. It's not about getting the lowest rate or shortest term. It's about what strategy creates the best outcome for your household blended interest rate and your overall financial picture. Most people are living by rules from the 1930s. We're in a different world now. The question isn't whether you can pay off your mortgage, it's whether you should. Bottom line, if what you thought to be true turned out to not be true, wouldn't you want to know right away? Let's look at your complete financial picture and see where you really stand. Visit rsrlings.com/keysteps, rsrlings.com/keysteps to get your financial house in order and see how strategic debt management could work for your family. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com. And yes, of course, that Home Select program is still the very best loan on the market. And I share all the time, it is a program that actually has higher rates and higher fees than anything else, but saves you more money than anything else we have. Why does it save you money? Because you pay less interest. and you get all the liquidity of your home equity. Think about that part of it. It's just a win-win-win-win-win-win situation. So go to gethomeselect.com and learn about it. Whether you think it's right for you or not, how can you make an informed decision if you're not informed? I love it. So if you joined us late today, make sure you go back and listen to the replay where we talked about the new California Dream for All program that's just kind of getting rolled out right now, or it's you got to be getting involved in getting pre-process right now, getting that pre-approval in order. And you got to be working with a lender that works with CalHFA, that's approved with CalHFA, which our team is. So make sure, if you didn't hear it's only $150,000 to help you buy a house. Just throwing that out there for you, or up to $150,000. As always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.